Hello, folks. My name is Darren Coble. I am the founder and principal consultant for Versa Business Partners, a human resources consulting firm based out of Magnolia, Texas, and just launched the consulting firm this year. And we're out here to support small businesses like yourselves, as well as just provide executive coaching, leadership coaching, transition coaching, any type of support that you may need. If you're small and don't have an HR person or HR department, I can help with that as well. Wanted to let you know that this is a webinar series that we started in partnership with the Chamber of Commerce, out of Bryan College Station, the SBDC out of Bryan, and then also Employer Flexible, who offer PEO services in case you don't have an HR department. They can actually serve as your full-on HR department and employ your folks or your employees and allow them to have a co-employment situation. And so we'll send out some information after the call that will provide a little bit more information just from an educational standpoint on what's going on with this topic, the CARES Act, as well as just general contact information, a link to the recording, and those kinds of things. So again, just want to say thank you to Bryan College Station's Chamber of Commerce and the team at the SBDC as well for helping us really get this kicked off and get this information out to everybody to try and help navigate what we're going through with COVID-19 and the pandemic. Today we've got James Larkin, a CPA out of College Station. He's a partner at Thompson, Derrig Craig, and he's been with Thompson, Derrig Craig for about 13 years, and he's an Aggie. And so we're excited to have him join us and help us continue the conversation of the CARES Act. As we had the meeting last week that kind of kicked off the introduction. If you missed that, it's available on the link that you can register for the webinars on. We've got all of our recordings out there. And we knew, based on the amount of questions that we had and just the fact that this legislation and the administration of the different acts that are happening are changing frequently. And so with that, we wanted to invite James. Fortunately, he volunteered to join us and provide just kind of a continuing the conversation update on the CARES Act. So he's going to provide some education to us in the first 15 to 30 minutes of the call. And then after that, we'll open it up to Q&A. And then we'll also be answering questions kind of as we go, as they come in on the app. I'm sure James will answer some of these as they come in. But after that, we'll keep going. And if I see some chat boxes, I'll be responding to those as we go as well. James, are you ready to take over the screen and take off?
Ready to go. We'll see if technology will be my friend today.
All right, great. If you would just tell us a little bit about yourself, and then just have at it.
All righty. Well, thank you for that introduction. As Darren said, I'm a CPA here, College Station, with Thompson, Derrig Craig. Hoping to be able to provide you some information that will help you navigate the difficult environment that all of us find ourselves in. The CARES Act, as Darren mentioned, there's a webinar from, I believe, last Thursday that discussed a couple of provisions in this act. I'm going to try to do my best not to overlap too much, but I wanted to hit the highlights on I think the most relevant provisions for most folks out there. In regards to this, there's some individual as well as some business provisions. So the CARES Act, you can see the full name there, signed into law on March 27th, designed to provide financial assistance to individuals and business with the various provisions, the recovery rebates, loans and loan forgiveness, some different credits and other tax saving / refund opportunities. So we're going to run through like I said, the hopefully most relevant individual and business provisions. So starting with individual provisions, really three main ones: the recovery rebates, numerous retirement plan changes they made, as well as some changes they made for charitable contributions. So on the recovery rebates, this was discussed on last Thursday's webinar. So I'm not going to go into great detail on those, but you can see it's basically $1,200 for every individual, $500 for each dependent child. They do have some phase-out ranges, so depending on your income, they may reduce or potentially eliminate the rebate in total. I know they were trying to get those sent out soon. I have not seen that has started yet, but I know the IRS is feverishly working to try to get all those checks in the mail or direct deposits sent out. Now, one thing I wanted to note on this is this is actually a 2020 credit that they are paying out early. So if for some reason you're, or based on your income, if you're unable to get the full credit or no credit, you will have another opportunity on your 2020 tax return. That credit will then be available on the 2020 tax return. Of course, if you've already received it, it'll just reduce that credit for what you've already received. But this will be a part of the 2020 tax return, this rebate, credit recovery rebate. So they made several changes to retirement plan rules, all very favorable and really friendly. For any coronavirus-related distribution up to $100,000, and they've defined coronavirus-related as a 2020 distribution as a result of being diagnosed with the coronavirus or having a spouse or dependent diagnosed with the coronavirus, or having adverse financial consequences from being quarantined, furloughed, laid off, reduction in hours, loss of child care. So that category is very broad and opens up the door to almost anyone to be able to take this coronavirus-related distribution. So if you chose to take a distribution from a retirement plan, they have implemented several different changes. The first one is there's no early withdrawal penalty. So in general, if you take a retirement distribution before the age of 59 and a half, there's, in addition to the income tax you have to pay, there's an additional 10% penalty. So the 10% penalty is waived. You still have to pay the income tax, but the 10% penalty would be waived for this distribution. Maybe even bigger than that to me is the next item, the 3-year repayment that they're providing. So in general, once again, if you take a distribution from a retirement plan and you recontribute the money back into that same retirement plan or roll it from a employer 401k to an IRA, if you replace it within 60 days, it's a rollover, which would not be taxable. That distribution would not be taxable. Well, what they've done is you have up to 3 years to repay this distribution and have it be treated as if it was a 60-day rollover. So that's a pretty big, a pretty generous repayment period. So you can take a distribution in 2020 and not have to repay it until 2022, or 2023, I should say. And it could still count as a 60-day distribution. You won't have to pay tax on any of that distribution that you took. The third item, the income inclusion spread. So if you do not repay the distribution within the 3 years, instead of having your distribution completely taxable in 2020, it's going to be taxable over a 3-year period. So a third of it would be taxable in 2020, a third taxable in 2021, and the final third in 2022. So those are the big 3 changes, or 3, I should say, benefits they've made for any coronavirus-related distribution. No 10% penalty, the ability to repay it within 3 years and not have it be taxable at all, or the ability to spread the income tax implications over 3 years as well. Other retirement plan changes they made are there's no required distributions for 2020. And then they also made some changes to allow increased amounts and eligibility for loans from employer plans. So if you're eligible to take a loan from your employer's 401k, they've changed those rules to make the amounts and the eligibility for that easier. The final individual provision is they made some changes to charitable contributions. So for those that do not itemize or have not, let me back up. With the Tax Cut and Jobs Act that was passed at the end of 17, they doubled the standard deduction for all taxpayers, and that resulted in a lot less people being able to itemize their deductions. So you may not, if you don't itemize, you're not getting any tax benefit for your charitable contributions. What they've added is for 2020, you can get a deduction for up to $300 for a charitable contribution without itemizing. So that's one that's available for anybody. The other thing they did was, generally speaking, you can only deduct your charitable contributions up to 60% of your income, and they've eliminated that for 2020. So you can deduct up to 100% of your income as a charitable contribution. So those are the kind of the three primary or three categories, I should say, of individual benefits they've enacted. Now I'm going to kind of run through some of the business provisions that they've included in the CARES Act. The first one, which I know there's been a lot of talk out there, and this is also part of last Thursday's webinar, so I'm not going to dive too deep into this one, but it's the Paycheck Protection Program, where eligible businesses can receive a loan up to 2.5 times of their average monthly payroll, and then if spent on the acceptable ways, then that loan can be forgiven. I will point out that the loan costs that you take into consideration for forgiveness of this loan are based on what you spend the following 8 weeks after you get the loan. So day one, when you get the loan, what you spend the next 8 weeks is what's going to be considered as part of your loan forgiveness. So I have linked the SBA website to this that has some more information about this program if you want to go there and look at it. There's lots of questions about, I know there's lots of questions about, well, I'm self-employed, I don't have any employees, I'm a sole proprietor, so I don't have payroll. What am I eligible to get a loan for? The number one thing I would tell you is go talk to your bank. The SBA has put all the burden on the banks to make those decisions about the loans, who's eligible, how much, and then even maybe more importantly, you need to have the conversation with them about when we get to the back end and it's time for me to provide you the documentation for the amount that's going to be forgiven, what do I need to provide on the back end? And for those that have employees, that's a much clearer answer because you're providing payroll reports and such. For the sole proprietor who maybe has no employees, I have not seen a clear answer of what they need to provide on the back end. On the front end, we've had several of our clients who are providing their Schedule C from their individual tax returns that shows their net earnings, because that is one measure that can be used to determine the amount of the loan that they can achieve. I think also if you're receiving 1099 miscellaneous from your customers, you could also provide that, but I would recommend you have that conversation with the bank because they're the ones that are going to be making those final decisions. Now the loan is, once again, based on the payroll or in the case of a sole proprietor, their income or their net earnings. It's capped at $100,000 per employee for the year. So If you're a sole proprietor, no employees, then the maximum amount you would be eligible for would be $20,833 would be the maximum loan, because you're capped at $100,000. If you do the average of that over 12 months, then times the 2.5, I believe you get to the $20,833 would be the maximum loan amount for somebody without additional employees. Now I see we do have one question about what do you have a banking relationship that they are not an SBA lender? Will other banks help you with this loan if you do not have an account with them? I believe the answer to be yes, but I think you're going to have to search out search out the banks and see who's willing to help and who's anxious to help. I do know one bank in town, at least I know they were working all weekend trying to process loan applications. And obviously they're trying to help existing clients first. So you may kind of get stuck at the back of the line if you have a relationship with somebody who is an SBA lender. So you may need to search out somebody who is. I do also know the SBA was providing an expedited approval process for banks to become SBA lenders. So it could be that your bank that you have a relationship with now may be able to take this on soon. I don't know. But on the PPP program, happy to answer questions and try to help, but I'm encouraging everybody to sit down and talk with your banker, because they're the ones making the decisions as far as what can you get. And then I think a very important conversation is the back end. What do I need to provide you at the end to get this loan forgiven? And make sure you understand what they're going to want. Next provision I want to discuss is employee retention credit. They are now offering a credit for 50% of qualified wages up to $10,000 per employee. So that's potentially a $5,000 credit per employee. And with the idea, of course, that you're retaining these employees and still paying them. So to qualify for this employee retention credit, you either have to have your operation suspended due to an order from some government authority, or your gross receipts for the quarter are less than 50% of what they were for the prior year. So for example, if you're, make it easy round numbers for me, if your gross receipts for quarter one of 2019 were $100,000, then you would need gross receipts in quarter one of 2020 to be $50,000 or less, and you would qualify. Once you qualify for this credit, you continue to qualify until your gross receipts exceed 80% of what they were the prior year. So going back to my example, let's say, let's make it easy. Gross receipts are $100,000 per quarter for all of 19. So quarter one of 2020, your gross receipts were $49,000, so you're under the amount, so you qualify. Quarter three of 2020, your gross receipts, they stay at some level under 80%. Quarter three, your gross receipts are now $82,000. You've exceeded that 80%. So quarter three would be the last quarter that you were eligible for this credit. You would no longer be eligible in quarter four in that example. So this is for wages that you pay employees beginning March 12th through the rest of this year. You're not eligible for this credit if you get the PPP loan. So that's something to note. So the way you capture this credit is through, it's a credit against payroll taxes. So you're going to claim this credit on your Form 941, your quarterly payroll filing. If you have gone and looked at the 941 for the first quarter of 2020, because there are wages that would be eligible because it begins March 12th, the IRS is not ready for this yet. So they say, don't report any of those wages on this 941, wait till the second quarter and report them on the second quarter's 941. So they're going to have to rework that whole 941 to account for this credit as well as some of the other provisions. But you claim the credit on the 941, and it's a refundable credit, meaning that if your credit is, let's say you have one employee, for example, and you get the maximum credit, $5,000. Well, if your payroll taxes are only $2,000, such that the credit is in excess of the payroll taxes by $3,000, they will send you the check for $3,000. They will refund you the full amount. So you'll get the full credit. You either get it by reducing the payroll taxes you are going to deposit, and then in excess of that, they will send you the money back. If you know that you're going to have an excess credit and want to get that money back sooner, you can use Form 7200, which they just came out with, to request an advance on this payroll tax credit that you expect to receive. So this credit would be only for those who have employees. So the sole proprietor with no employees, there's nothing here for you on that slide, but the payroll tax deferral is an option for that sole proprietor as well as anyone else who has employees. So on the payroll tax deferral, the employer's portion, so not the employee's portion, but the employer's portion of Social Security taxes beginning March 27th through December 31st, 2020, so once again for the whole year, can be deferred. So you would instead of submitting those to the government, you can hold on to that cash, and then one half of the taxes you hold on to would be due in 2021, December 31st, 2021, and the other half would be due December 31st, 2022. So potentially you could hold on to that cash for over 2 years. Payroll taxes you're paying right now, one half of them wouldn't be due till December 31st, 2022. So it's a provision to help folks with their cash flow right now. Now this one, there is no qualification requirements. You don't have to be impacted anyway. It's available to any taxpayer, other than if you receive the PPP loan. Once again, not an option for you. Now, I mentioned this one is eligible for that sole proprietor who has no employees and is paying self-employment tax, and that's how you would get this deferral. As you can reduce your estimated tax payments by one half of the self-employment tax that you would normally be submitting with your estimated tax payments. So on the 2020 return, I don't know how they're going to show that, but they'll need to update the forms to calculate and track. This is how much the self-employment taxes you have not paid this year and deferred to 2021 and 2022. So the last couple of provisions we discussed were primarily employee-related. These next couple we're getting away from that, and these next couple are designed to reduce 2020 taxes as well as generate refund opportunities for taxes paid in prior years. So the first one is the changes they made to net operating losses. So as part of the Tax Cut and Jobs Act, which was signed at the very end of 2017, they changed all the rules for net operating losses beginning with 2018. So net operating losses generated in 18 or 19 before the CARES Act could not be carried back to prior years. They had to only be carried forward to future years. Well, they've changed this so that NOLs from 2018, 2019, and then 2020 as well will be allowed to carry back 5 years. So if you have an NOL from 18, you can take that now and carry it back to prior years and get a refund now. Same thing for if you have one from 19, and same thing would be for one generated in 2020. Obviously, you won't be able to file that until the 2020 year is over, but there's refund opportunities for maybe an NOL you had from 2018 or 2019. They also had limited NOLs to only be able to offset up to 80% of your income. Well, they have removed that as well. The NOL now can reduce up to 100% of your income. And as part of that TCJA law, they came up with the excess business loss, which was losses over a certain amount. It was $250,000 for a single or $500,000 for a joint filer. Losses in excess of that were not eligible to offset other income, such as wages or investment income. Well, they've eliminated that for 2018, 19, and 20. So once again, opportunity potentially to go back to 18, go back to 19 if you've already filed, or change your 19 filing if you haven't filed, and take advantage of these changes. The last thing I was going to discuss today is qualified improvement property. So this was also not quite a change, I guess, but when they drafted the TCJA, they had a drafting error, which made qualified improvement property, which is generally speaking property or improvements to the interior of a building. They made that 39-year depreciable property. So as part of the CARES Act, they have gone back and corrected their error and once again made qualified improvement property 15-year property, which means it's eligible for bonus depreciation, which as it stands today is 100%. So any QIP can basically be expensed immediately. When they corrected this, they made it retroactive back to January 1st, 2018, which is when TCJA came into effect and caused this issue. So once again, presents an opportunity to potentially go back and amend prior returns and generate maybe some potential refunds. So those are the business provisions. Now I'm hoping that is helpful to you and hoping that that can point you in the right direction on some matters that can help ease the burden that we're all feeling right now. Be happy to answer any questions on that or any other questions you may have.
Great, James. Thank you. Thank you for that information. To me, it's just never, it's never lost to me the fact that I think last time I looked at the CARES Act, it's over 850, 880 pages long. And so to be able to carve through all of that information and pick out for business owners and pick out what's important is pretty challenging. Just to be able to make sense of it all and figure out who do I talk to, where do I go. As you look at the conversations that you're having with your clients right now, what are some of the things that you're hearing, or some of the things that you're advising frequently on in terms of, I guess what are the most common questions you're facing as we go through this?
You know, everybody's focused on the PPP right now because it's immediate help. They put a dollar amount on it, so if you're going to apply, then potentially, if you wait, potentially it could run out. So everybody's kind of focused on the PPP right now, and I understand that. And we've had a lot of conversations with the clients about that, but once again, that's the bank. They've got to really get in with the bank and work through that. We've been helping provide the documentation that they need, but that's kind of a bank process. I don't know that enough attention has been paid to some of the other opportunities with the payroll taxes and the opportunity to either defer them or to get the credits. You know, the credits, that's not immediate cash in your pocket like the PPP, but that is, I mean, those are credits. So they're dollars that you do not have to pay. You either do not have to submit the payroll taxes and keep them in your pocket, or or a combination of both. They will send you a check, and you don't have to submit the payroll taxes. So, those are dollars in your pocket just the same. Of course, that's limited to based on the number of employees. And the payroll tax deferral is an opportunity for anybody. You don't have to be impacted by that. You don't have to show that you've been impacted by the coronavirus. That's an opportunity for anybody to hold on to some cash now, with knowing in mind that you're already going to have to pay those later. But we're talking 2 years and 9 months down the road on one case, and in another case, another year and more than a half. So I think those are some opportunities that folks aren't focused on immediately.
Sure. Yeah, no, that's helpful. And to see that it's opened up to sole proprietors and some of those kinds of things is nice. Is nice to see that that support's getting out there. I know that's even applied to some of the unemployment situations out there as well, and unemployment access in Texas as well as federally. So that's pretty cool. How about we have a question that came in as it relates to the tax credit and the PPP, and I think this may apply more broadly as well. But a lot of these programs, it sounds, are if you do the PPP, you can't do X program. Is there a clear direction on that? But as it relates specifically to the tax credit, is that the case? Like if I take that tax credit that's out there, am I eligible to take the PPP?
Yeah, and that's a good question. So the way it's written right now, they're saying if you get the PPP loan, you're not eligible for these other credits. I know they're working on yet another bill, so I would keep an eye out because that could change. They may, they may make it such that you can't use the PPP and get the credit for the same wages, which would make sense. But I'm not sure it makes sense to have folks receive the PPP, spend it over the next 8 weeks, and then not allow credit on wages past that date if the employer is still impacted. But the way it reads right now, that is correct. If you receive the PPP, then you're not eligible for some of these other, either the employee retention credit or the payroll tax deferral.
Great. Another question that came up, you talked about in the PPP, the 8 weeks, something about being spent in the next 8 weeks. What can you elaborate on that a little bit more? What exactly, what calculation does my next 8 weeks of pay, what does that entail?
Right. So you apply for the PPP loan, you get the loan. The way the provision reads is once you receive that loan, then it's what you spend it on over the next 8 weeks that counts in determining how much of the loan is forgiven. So you can't get the loan and count payroll costs or any of the other things that are eligible, rent, utilities, etc., that you pay 3 months later after you get the loan. It's only what you spend in the following 8-week period. So when you go back to the bank and say, okay, I got my loan and now I'm here to provide you the documentation necessary to calculate how much of my loan should be forgiven, which is hopefully all of it, you can only use those costs you incurred over that 8 weeks from the date you received the loan. So that period, that 8-week period is key. If your goal is to get that entire loan forgiven, those next 8 weeks after you receive that loan, the cost you incur during that period are key in determining how much of that loan is going to be forgiven. So I'm encouraging folks not to only talk to the bank about getting the loan, but I think it's important to talk to them about what happens after I get the loan and what do I need to provide you at the end of this process so that I can get this loan forgiven. So that's what the 8-week period is. It's the cost you incur from the day you receive the loan for the next 8 weeks, or what are used to determine how much of that loan is forgiven.
Great. We had a note come in from the chamber as it relates to the banks that they have. The Bryan College Station Chamber of Commerce has created a great tool and infographic as well as it relates to the breakout of the two loans and to the lenders. And so, Debbie, I think I put the right website out there. If I did not, please respond with the correct website to get the folks to that information on the chamber, because I know you've put the chamber's put a lot of great tools out there for folks. All right, James, the next question is, it is 8 weeks after you receive the loan and not until June 30th. And so if I get the loan, is it 8 weeks from that date, or is it there through the 30th?
Yeah, it's 8 weeks from the date you receive the loan. The June 30th date is, as it currently stands, the last day to receive the loan. The PPP is eligible to make loans up through June 30th, unless they extend it. So it's, if you were to receive the loan on June 30th, then it's your expenses those following 8 weeks that are considered in determining how much of the loan is forgiven.
Okay. Yeah, that's a clarification that I hadn't understood before this presentation. The June 30th date gets confusing as you're looking out there and seeing the, just actually all of the dates out there are pretty confusing, and the different packages that are out there.
And depending on how things go, that date could certainly get changed. This is a fluid situation, but as they currently wrote it, that's the date.
Sure. So as we've said, it can change at any time, especially as they're rolling out new packages and new updates. The response by the government's pretty exciting to see how fast they're getting things out there right now. And just a reminder to folks that I didn't realize before all of this started this year was, as the government passes the law, it's then given to the administration, like the small business associations and groups, to figure out how to administer it. And then the banks have got to receive everything and figure out how they're going to administer it in the rules that the SBA set up. And even some of those rules will change as we go. So James got a new question that came in from, I need to probably do a calculation on what's going to be better, which option would be better for me, the PPP versus the tax deferral and those savings.
Yeah. So the tax deferral, you're going to not have to submit those until one half of them in December 31st, 2021, and that's for payroll taxes for the rest of 2020. So as you pay employees for the rest of this, if that's the option you choose, you want to use the payroll tax deferral, as you pay employees for the rest of the year, the employer's portion of the Social Security, so not of the Medicare, but of the Social Security, employer's portion only, not the employee's portion, the employer's portion only. You can hold that back, not submit it to the government, and then one half of it would be due in 2021, and one half of it would be due in December 31st, 2022. So that's a plan or a provision to help with cash flow. The PPP, potentially, if you meet the qualifications there, that's dollars that would be coming into you, paid out to your employees, and at least 75% out to your employees. The rest for other qualified expenses that then is forgiven. The loan forgiven is not income. So, most like, well, I guess if you I guess I'm struggling to see how if you qualify for the PPP, how it would not be better, since you're never going to have to pay that money back. And since it's based, that the amount you're eligible for is based on your payroll, I guess you could craft a scenario where the taxes you're able to defer are much larger, but I would think that the PPP would make sense if you're eligible, since those dollars are never having to be paid back, whereas the payroll tax deferral, you will have to pay those dollars. It's just you're able to kick that can down the road a little while. The employee retention credit, I mean, that's a $5,000 credit per employee, and so kind of similar to the PPP, that's dollars that you're never really having to pay. It's just not immediate cash like the PPP would be. It would be a reduction in payroll taxes you're submitting, plus potentially a check from the IRS. Now, on that one, you do have to meet the qualifications as far as being impacted, either having to suspend operations or a reduction in gross receipts. So I hope that helps.
It does. It does. And I have not seen any new questions come in. James, is there anything that we haven't covered? Or I know we've got Jennifer Davis out there as well that we haven't covered that may be of interest to the audience. I'll give it 1 second as I type the website for the Bryan College Station into the chat box as well, so folks will be able to have that. And again, they've got great resources out there to understand the SBA loans and the different options and those kinds of things.
Well, I think the only thing I would add is this is unlike most tax laws we deal with, this one is a very fluid situation, and when everyone's trying to make decisions in this environment, so there's constantly clarifications coming out from different agencies. And once again, I know they're working on potentially another bill which could change any of this or modify any of this. So I think you have to be vigilant in continually monitoring the situation to know what's available, what has changed, and how does that impact me. You can go to the IRS website. They do have updates there as well, although I would say they're a little slow to update, but they are providing information when they are able to get through some of this and provide some guidance, frequently in a question and answer kind of format. So there is more information out there. There's lots of information out there, and there's more coming. And once again, potentially a new act could change or alter, any of this.
Sure. Yeah, I just received one more question actually, and it's on the PPP loan as it relates to sick leave. Has there been any clarification on if I have an employee out on sick leave, if I spend that that money from PPP, will that count as qualified wages?
So the amount that you can spend for PPP is, I think, pretty broad. Bear with me a moment while I find a little bit more detailed note, but it includes the compensation that you would pay to your employees, so salary, wages, commissions. It includes vacation or family time, medical time, sick time, so yes to the sick time. It includes healthcare costs, retirement costs. So all of those are included in what is considered payroll costs for the PPP.
James, I just want to say thank you for helping us try to unwind all of this information and all of this technical detail and data. wrapped around the CARES Act. As you've mentioned, it could change, which is a little terrifying. But I'm grateful for you taking the time to study and put the slides together and put this information together for our folks out there that are calling in each week to hear the information. Folks, I want to remind you we've got webinars scheduled through the end of next week. Right now we have Stephen Sutton from Tech Bundle that's going to speak with us about evaluating security risks and other IT considerations. And then we have someone, WB Gibson, that will be speaking about our commercial insurance considerations that we need to be taken into account as it relates to health insurance and commercial insurance for our employees and for our business. That information's out there on the website at the bottom of the slide, versabp.com/COVID-19-webinars. You can also vote. We'll be putting out new topics that are coming out online, and you can vote there to see if there's an information or a topic that you want to learn more about in the upcoming webinars. We're going to continue to partner with the Chamber to keep the series going on Tuesdays and Thursdays at 1 o'clock, as long as we can, as long as we've got relevant topics for folks to listen to. Please let us know what you'd like to learn, what you'd like to know more about, and if you have these questions, we're doing our best to connect people offline as well to the experts that are talking and volunteering to do these sessions. But again, special thanks to the Chamber of Commerce, the SBDC, Employer Flexible, and also James, thank you again for joining us from Thompson, Derrig, and Craig and College Station to help us understand this stuff.
Thank you for having me, Darren.
Awesome, James. Appreciate it, folks. Thanks for calling in, and hopefully we'll talk to you on Thursday.